All right, guys. Waiting on Blue Lion Finance right now. So just give me a thumbs up that you can hear me okay. Obviously, you can see I'm at a different location. So yeah, we're going to try to make do with what we got here. I'm on the road and happy 4th to everybody. Having a couple brews here. Got some good information to go over. So just waiting on Ari right now. So we'll see how that goes. Oh, I think he just popped in. Boom, there he is. Talk about timing, brother. How's it
All right,
going?
we're back at it. It's been 8 days, Colton, since we last spoke, man. 8 days.
Crazy stuff. So if we lose service, guys, I got a huge storm rolling in here. So hopefully everybody can hear us and hopefully we don't lose service and everything goes smooth here. But man, talk about a crazy week in the markets. Roughly 7 to 8 trillion dollars lost from year to date in the market. What are you seeing? What are you liking? Any opportunities out there that are getting enticing?
Well, first of all, again, just 8 days ago we spoke, and I'd like to say, at least for me, I was pretty pessimistic about what was to come. We got a rally heading into the week, but all in all, just looking at the composites, S&P down 2.3, 2.4% from when we last spoke. The Dow 1.4, 1.5 in that range, and NASDAQ 4.5%.
Whew.
So that's all I have to say is from the
Yeah.
last we spoke, it pays to be patient. Don't jump the gun on getting in during these mini bear market rallies. What am I seeing right now in this week, this upcoming week? First of all, markets are closed on Monday. I think we're going to get a lot more excitement heading into the week up until inflationary data starts to come out. I'm getting amped up. I'm getting amped up because I am taking a look at the week ahead. In the agenda, we have the Federal Reserve. They're going to be releasing their FOMC minutes.
Yep.
Talk about some disruption. And on Friday, I think is a really important date for investors to be taking a look at what's going on that macro level, a jobs report, the employment report coming out.
Dude, I
All
am
this
totally
great
on
stuff.
board. I think you're 100% right. I think we're going to have a long weekend. People are going to digest some stuff here. I think there's going to be a lot of excitement going into the following week here. We have about, I don't know, about 5 to 6 trading days of grace period before any real data comes out. So I think that is going to bring a lot of optimism and new money to the market, the buy the dip crowd. Anytime you're trading below 4,000 on this market for the S&P 500, I feel like that buy the dip crowd is still there and alive and well. Along with that, I will say this, Ari, I'm starting to dig into yields here, and I want your opinion on this. Okay, so definitely, I'm not a yields expert, but I'm starting to see some things unfold here, and I want to give just a quick background on yield. So when we have a positive yield, that means that when I put my money into a 3-month treasury, I'm getting, let's say a 0.5% return. And when I'm putting my month in a 30-year treasury, I'm getting a 3% return. So it has a positive correlation. The longer I leave my money locked up, the more return I should get for my capital. What is going on is we're getting a flattening of the yield curve. And when the Feds raise rates, they raise it on the short end, and we're starting to see a lot of money flock to the long end, driving that 30-year down, and it's causing the short end to eventually come up when Feds raise rates. And I want to show you something really quick. I want your opinion on this. So what we have in front of us, Ari, I don't know if you can see this. I'll make it a little bit bigger. So this is the correlation between the 3-month and the 10-year. Okay, this is the most accurate correlation to recession. Now, right now, I'm not trying to scare anybody. I think we're in somewhat of a mild recession. Okay, once the job markets follow, if we get a layoff, that'll just confirm my thesis. But what we have going on here is we're getting a nosedive on the 3-year to the 10, or the 3 months to the 10-year. And once that crosses over, that's the inverted yield curve that we really need to pay attention to. And that would be a signal to recession. And anytime 8 of the last 8 recessions we've had have followed this curve, want your opinion on this?
That's all I have to say in regards to recession right now. If anybody heard the latest out of the Atlantic Fed office, folks, we're already in a technical recession.
Yep, I agree. Man, I've been preaching it, brother.
You hit the nail on the head the last we spoke, but all in all, I think investors are troubled right now with where to invest, with how to invest. I was listening to a segment with Jamie Dimon earlier today, and he was just sharing the fact that, look, when we've never been in a certain situation, don't try to predict the future. Also, I'm not going to fight the Fed here, right? I
Yep.
want to watch the Fed. And the truth is, right now, and we spoke about this the last time we jumped on here in a live stream, was the fact that the labor market is strong and people got money in the bank. You have businesses that are well capitalized, but here we are at a point in time when inflation is still high and we can't seem to bring it down.
Yep.
We're watching the rates. The rates are going to be cranked up, I want to say, by another 75 basis points. I want to be pretty confident when I say that. But,
Yep.
all in all, what this means is we're in unprecedented times,
Yep.
and tread with caution here.
Yeah.
And with the Atlantic Fed coming out already with that preliminary data and showing right now that we are negative GDP again,
Yeah.
proceed with caution. Proceed with
Yep.
caution.
Yeah, I agree with you, man. It's kind of just piggybacking off of you. I think at this point in time, when I'm seeing the yields collapse, and what people need to understand, yields drive everything that we do on a daily basis. Yields drive profitability and able to get liquid to the stock market, but essentially it drives everything we do on a day-to-day basis, whether you want to talk about buying a property, whether you want to talk about using a credit card. Everything we do is derived off of these yields. I'm curious to see how the yields respond to the next rate hike. If we get any sort of recession fears, I think a lot of people are going to flock to the long-term end of the yield. And I think the Feds are going to raise rates on the short term of the yield. And I think we're going to see some crazy yield action, which eventually is going to drive the stock market. Now, short term, Ari, I believe it could actually cause a rally, as when yields drop, that's usually a signal for the markets to rally. But longer term, when you get that inversion, not good, right? That's a slowdown on growth. So definitely that's what I'm really keeping an eye on. And I even texted you throughout the week that some prices were getting juicy here, and you were like, "Yeah, man, be cautious." And so I agree with you on that. But man, anything? Did you pick up anything? Anything you're looking at? And I got a question for you and actually the viewers today, right? If you could pick two stocks, now you can't cop out on me. You can't pick an index, okay? Because you can't pick the SPY, you can't pick VOO. If you had to buy two
Well, that's good.
stocks
I'm
right
a
now,
VTI guy anyway, so it's
yeah, VTI. All right, so no world. All right, you had to buy two stocks today at the prices that they're at. What two stocks are you buying and why? And I'm cheating because I haven't done this for myself yet, but I wanted to get your opinion. And anybody watching this, if you have two stocks that you are eyeing or that you would want to own for the rest of your life in the market that we're in today, what two stocks would you be buying?
First of all, I'm going Apple, hands down. I'm
I knew
going
you were going Apple. I was going to write this down. I was
stock
going to
one.
write down, I think I was going to write down Apple and Johnson and Johnson. Those would have been my two guesses for you. Apple and Johnson and Johnson.
You're close with Johnson and Johnson, but I'm actually liking at this point more in time the healthcare play.
Yeah,
Medtronic, ticker symbol MDT, Medtronic. It's currently around $91 per share. I think it will come down a little bit more, but I'm bullish on Medtronic long term, simply because we're talking about, okay, Johnson and Johnson. It is one of my favorite stock plays out there for the long term, but I'd like to consider Medtronic almost J&J's brother or sister, if you will, right? Because it's just another healthcare industry leader. They're med tech focused, and what I like about Medtronic is I don't think that it gets enough credit that it deserves, but it's been beaten down throughout 2020, 2021, supply chain disruptions. They had labor shortages. They had elective surgeries that were pushed off in the hospital. Obviously, not good for a company that sells medical technology. My father, even working in the med tech space, something I just always heard from being a young boy was always invest in healthcare. It's
yep.
needed. It's not going anywhere. And I've always run with that Johnson and Johnson and Medtronic. I fared very well with Medtronic, picking it up in 2020. In March, rode the wave back, wave of recovery, and I'm looking at it again now. I did not pick up anything recently. I've been
Yep.
cautiously watching the market, patiently waiting. Actually, I'm waiting for July 12th, maybe July 11th, 12th, and 13th. I think we're going to get massive movements around these dates with the CPI data to come out. But I have my eyes on Apple, Medtronic, Procter and Gamble, T. Rowe Price, and Visa as my top 5 picks right
No,
now.
no JP Morgan, man. Come on. JP
I
Morgan.
know, I
Dude,
know,
I think you have to start looking at the big banks right now, because when we think about, okay, so in my opinion, how we're going to know we're at a bottom, Ari, is the banks. The banks are going to lead us to the bottom of this market. Okay, technology, I think, you know, there's still a long way to go. Banks right now are trading pretty much for book value. If they get any cheaper, I think you have to buy them. And secondly, I think when they stabilize and flatten out and we get some buying pressure in the banks and get some optimism in this market, when they flatten out, I think that is the key. We are at the bottom of this market. The banks are going to lead us to the bottom of this market, in my personal opinion.
I would agree. You know, I'm going to come clean. I have Bank of America in my portfolio, and I've been dollar cost averaging into Bank of America, not as of late, but that is the position that I have over JP Morgan. Either
Yeah,
bank, I think, are solid bank. I mean, JP Morgan's the largest bank in the US. Bank of America follows suit.
Yeah, I'm looking at JP Morgan. I got a story for you. I think you're really going to enjoy this story, and I think you could shed some light on this. I'm not going to use any names, but really quick, want to give a shout out to a couple people that are on this channel. First, Venue, he helps me a lot with kind of material to come up with, and he's been helping with the cash flow. Anthony Castro, thank you. William Reed, thank you, and everybody else that's been really active on this channel. I thank you guys enough. R. May, Susan L, PJ, Tony. So a couple of names that come to hand. I know I'm missing some of you, but just wanted to give a quick shout out to those folks who have been loyal to the channel and just a positive influence on everything going on. Zhang, you're here. Thank you so much. Actually, Zhang is going for CPA, CFA, Charter Financial Analyst.
All
So,
right.
yeah, I think testing at the end of this year, if I remember correctly, but hopefully that's going well. Taking a look at MDT right now, and I'll tell you what, man, 3% yield. When I look at the financials on it, top line revenue growth looks pretty solid. Obviously, slow growth, but you stated that there's opportunity there for that to grow as they've dealt with some logistical problems of hiring. It sounds like it was hiring.
Crushed in 2020, 21, and now into 2022 here with labor shortages, but more so we're looking at supply chain disruption, drop in sales, and then just because of hospitals delaying elective surgeries. I mean, we're talking about a company that has been devastated by the pandemic.
And the crazy thing is, with them being devastated by the pandemic, cash flow still strong, man. Looking like almost pushing 6 billion in free cash flow. I gotta dig more into this one. This one looks very interesting. What analyst expectations growth rate? Let me take a quick look here. I mean, I think this is a great call out. Next 5 years, double-digit growth rate. Does that sound about right?
Here's what I knew I was going to throw you off if I didn't say J&J.
Yeah, I know. You had me digging here. You had me digging. So no,
But
this is a
toss the
great
ball
call
over
out,
to you.
man.
I got to
Great
toss the
call out.
ball over to you. Your top 2 stocks here that you would pick.
On this recent sell-off, man, ooh, this is a tough one. And it's so funny. Like I was ready to ask the question, but I wasn't ready to answer it. This recent sell-off, it's tough, man. I hate to be such. I think I got to go Apple as well, just for the safety aspect of it. And if I was betting the house and I was holding for the long term, I think I would do. I think I would do Apple, and I think I would take the risk because Apple's such a safe play. I think I would take the risk with Meta.
Ooh. You know what? I don't even think it's that big of a risk. I think we're looking at 2, 3, 5 years down the road, a lot of growth to come
Yeah,
at it way. You got to let time do time's thing, right?
Yeah.
Like, I think what we're seeing now is a transitionary period for Meta, but there is so much growth ahead. They're the future. And I don't know if I alluded to this the last call we were on, but I was talking to somebody about this. What happened with Facebook, right? We had this boom, Facebook, the world loves it. And I think like 2, 3 weeks before Meta was Meta, I was talking to a colleague and I go, I'm not excited about Facebook these days because there's nothing new about it.
I'm
And
not either. I'm not
a
either.
couple weeks later, Mark Zuckerberg coming in hot with Meta, disruptive. No one really knows, too much what's going on, how it's going to work in the future. Like, even I myself, I'm curious, but I think there's a lot of growth. It is the future.
I think so too. It seems like there's a lot of opportunity for income with the other thing you have to understand with Meta is there's 90 businesses rolled up into this company here. 90 businesses and they're not going to fail. Well, I mean, I shouldn't say that. They're going to spend a lot not to fail. And they invest in the future and they invest in architecture and they invest in young talent. And that is innovation in itself. So they have a ability to acquire young talent. They've had a knack to kind of uh, last longer than the trend, right? Today, TikTok is a trend. Is TikTok going to be here next year or is it going to be a new trend? I don't know, but I know Facebook has had staying power when it comes to this. And then you think about the meta, it's like you can buy Facebook today for just buying it for the cash flow. And then anything above and beyond that that comes out of Meta is actually just free return for you because you're basically buying it for you're buying it for the cash flow as of today. Anything it does above and beyond that cash flow is basically it's playing with the house's money, in my opinion.
I say, ladies and gentlemen, you heard it here first from Financially Fit. Guarantee your money back.
No, 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 no. Don't put me on the spot. Watch, they file bankruptcy in like a week. I'll be like, yeah. Hey, it's better. It's better than those crypto. It's better than those crypto sites everybody's recommending, dude.
First,
How
can we talk about crypto for a second here? Because I've been watching the crypto market just tank.
it's
And first of
crumbling.
all, I think there's money to be made there. I don't want to, throw anybody off their game, but it's a gamble. We're talking
Oh,
about a gamble here. And the value behind crypto, in my opinion, there's nothing there.
yeah,
It's based off of supply and demand. Demand is low right now, and people love to gamble. And there we are,
yep.
once again, people losing money with crypto.
Yeah. Yeah, I'm in the same boat as you. I advise people to family members to kind of stay away from it right now. If it gets if we adapt it, if it ends up it's not solving a true problem here. And when I look at businesses, I can value a business because a business is solving problem, a business spits off cash flow. I can say I'm willing to risk X amount of money because this business has X amount of opportunity and it spins off X amount of cash flow. When I look at crypto, the only thing that's going to drive the price is that my next door neighbor is going to pay more for it than I did. And I just don't see the value in that. Now, I'm sure I'm missing a lot of different things here, and that's okay. I'm okay missing it. I just personally don't know how to value it. So, no ill qualms with anybody that has it. And anybody interested in it, I try to treat it like part of their portfolio, like maybe 5%. It's like a gold play, it's a cash play. You know, leave it at that. That's kind of my mentality. And
Look, we're,
that
we're,
leads
we're
me.
13 years into this experiment, if you will, with crypto. Again, it's going to take long time for crypto to actually break in and I think generate value for itself. I'm not saying there's never going to be value behind it. I don't know. But to your point, right now, as we stand, it's a gamble.
So I don't want to get too deep in conversation and take away from what we're doing here. Had a long conversation with somebody that is a subscriber. I'm not going to drop any names, but he wanted me to go over their portfolio, really give my opinion. And I was like, this is not financial advice, but this is what I think. And we had a
Guarantee
long
you your
conversation.
money back.
That's right. It's like, hey man, don't sue me, bro. but one of the aspects that we differed on was the crypto, and he asked why, and I said, well, my money is FDIC in a brokerage account up to 250,000, in my bank account for 250,000. And the other thing is this, Ari, if there's a liquidity crisis, but I have a relationship with my credit union and I have a relationship with my bank, and they can look at my assets and say, you know what, Colton, you're worth X amount of dollars. We're willing to take that risk with you. Here's a loan. You can't really do that with crypto. Like, so it's not insured, a lot of shady action going on. People are getting wallets hacked. And then I think about the fact that I don't understand how to value it. And then I think about the fact that the reason why I have my money in a bank is to possibly leverage that money I have in the bank for hard assets, right? Not digital assets, but hard assets, whether it be really a real estate, whether it be starting a business, something that I trust in myself. You're trusting in a complete entity that you have no control over, much like investing in a business. But with a business, there's SEC filings, there's, quarterly report, like you have all this stuff to follow. You have a paper trail to follow that. Don't have that with crypto, right? No real, it could be vanished tomorrow, and no insurance, no paper
Right.
trail,
I'd like to add, not yet. Um,
not yet.
but I think they're trying to get more regulation right behind crypto, and I totally get it. The whole idea behind crypto is no regulation, but in order to make people feel safe, okay, you need crypto. I don't even want to get political, right? It's like everybody's anti-police all of a sudden, but then stuff hits the fan, and
You
oh,
want the cops.
police,
Yeah.
right? So
Yeah.
we do need regulation on
Yep.
crypto, and that's just the reality. And I think once we do get regulation, it will become safe for everybody to jump in the game. And I think we'll start to get some more value if there's regulation behind it. You go to ask, someone in their 40s, 50s, their thoughts on crypto. It's not safe.
Right.
So you make something safe for the masses, you put regulation behind it. Again, all of that will take time. And right now I just see a market that loves to gamble. I don't know if that, the younger generations have ever really shifted. We've always been more, gamble-esque, right? And then you begin to get into your 30s and your 40s and your 50s and you're playing it safer. But that's my take on it.
Yeah. No, I agree. I agree 100%, which leads me to this next part. Definitely want your opinion on this as well. So guys, if you're coming in this and you're enjoying the content, just ask that you smash the thumbs up. So that conversation I had with the individual asking about his portfolio, and talked crypto for about an hour, then went over the rest of his portfolio.
For 5 minutes.
And no, it was a long phone conversation, but I think we both got a lot out of it. One, it kind of just made me remember that I am bringing value, even though I don't have the subscriber count. I am bringing value to people. I think that are, unfortunately, it seems that this YouTube algorithm really pushes the crypto, the 10x stocks, and it seems like the people that actually put out content, and that's why I love having you here, and I think that's why we connect, is that we're really trying, we might not have all the answers, but we're really trying to put content out there that is unbiased, truthful, not always the glamorous winning 10x stock, but it's safer, and safe is not always what gets rewarded. It's, unfortunate. But want your opinion on this. So portfolio was, I hope they don't mind me using this, but portfolio was Very Good Food Company, Beyond Meat, DraftKings, Skills, Voyager, PayPal, SoFi, T-Doc, Hims, Baba.
You're asking a very, I want to say risk averse investor, right? Value investor. These names are very reputable companies. I'll put that out there. I think there's a little bit more risk to each of them. You said very safe food company. I thought you were going to hit me with like Hormel Foods, right?
No, yeah, I mean, so a lot of these companies, were the SPAC deals that a lot
Right.
of individuals in YouTube have been. These stocks. If we talked about these stocks, Ari, I guarantee we would have multiple thousands of subscribers on top of what we have now, and it's
Should we
unfortunate.
start? Should
Yeah, listen, guys,
Hashtag-
listen. The next 10x stock is right here. The next 10x. Listen, Very Good Food Company. Let me just pull up the chart here. I want to show you first off, and this person is in their 30s, and we had a long conversation. And I said, listen, you have come a long way because this person is starting to value stocks. Okay. Starting to look at the deeper value of stocks. So, very good food company was, I don't even know where was it ever. It was about a $6 stock. It's at 23 cents. Okay. Now, these are stocks, Ari, that people were buying up like crazy because they
Hand
would
over
just,
fist. I remember. Yeah.
yeah. DraftKings is another one. Now, DraftKings is somewhat interesting. I did a video on DraftKings, did not like it. I said you need
Is
to
that
wait.
is this the whole portfolio? I mean, all what you mentioned and then crypto.
A big part of it was this. Yeah. And the reason why, oh, that's not what I wanted. The reason why I'm bringing it up is I don't think this person's alone. Okay, that's why I'm bringing this up. I don't think this individual was alone in building this portfolio. What I mean is, a lot of viewers, a lot of people that might be stumbling on this conversation that we're having, probably have some sort of ownership in a lot of these stocks, right? SoFi, interesting. Everything, all these companies are unprofitable from basically a cash flow standpoint. All of them. Okay, so I had a long conversation with them. I was like, listen, you know how to value stocks now because we've done a lot of phone calls, right? You know how to value stocks now. Discounted cash flow analysis is great, but the problem is it's not a guarantee. It's how you analyze a stock, right? And so we had this long conversation, and I was like, listen, you have an opportunity of a lifetime right now. The market is down 24, 25%, probably going to come down even lower. You don't have to outsmart this. You're talking about Apple, Facebook, Microsoft. Buy VOO, layer it in with some
Yeah.
VTI. You're given free money right now. Like, you're given free money. This is a get out. I was like, this is your get out of jail free card. You effed up. You bought all the hype stocks. I said you're still young, and this is your opportunity to go heavy in the indexes and layer it in with good quality companies. And I mentioned the banks, I mentioned healthcare, and I mentioned chip makers. I said buy VOO because you need to, at 30 years old, you need to own the top 10% of VOO. You have to. They're too innovative. They're not going anywhere. They own the market. You have to own the top part of VOO. I was like, you have to own some healthcare that pay dividends that are boring. That's going to lower the beta in your portfolio. And I said, you have to own the chip makers on this massive dip we're going to have, because they're essentially going to run the world in the next 15 years. Whether it's cars, cell phones, computers. So,
Call it 5 to 10, honestly.
yeah. So this is what you need to do. I want your opinion, what your thoughts are.
Yeah. So first of all, I'll preface by sharing that, and by no means I'm not a financial advisor. I gotta throw that out there. So always do due diligence after listening to me. But at the end of the day, I've helped a fair amount of people get out of debt, start investing into the market, and actually establish, for all intents and purposes, financial fitness, right?
Yeah. Yeah.
And something that I've recognized across the board is, whether it was when I worked at the real estate firm, right? One of the guys in the mailroom asked for help, and he was in debt, and he had 2 kids, and he wanted to navigate through that and get out of debt and start investing. Or, it was someone that I had met in a cafe actually in Manhattan. We just started talking in line about investing, one thing to the next. We're an hour, sitting there together. Totally different situation, but same exact type of mentality when it came to investing, finance, um, again, financial fitness. And what I always share with people first and foremost is, before you get invested, please, please set money aside for yourself for emergencies. I call it the oh shoot fund,
Yeah.
right?
Yeah.
Is
Yeah. We talked about it a lot. Yeah.
Yep, life is going to happen. And if all your money is sitting in the market and all of a sudden we get a recession, even a bear market, what are you going to do? Now, if you're single and you don't have anybody depending on you, okay, but still not safe, right? But for, God's sake, your kids, wife, husband, whomever, have that money set aside, have a financial plan before you even get invested. So that would be, what I would share with this subscriber of yours first and
Yeah.
foremost is
Well,
getting yourself set up prior to investing. Now, when it comes to investing, the first step is finding yourself in a broad market ETF or index that covers the entire market. You get growth plays in there as well as value plays. And I call that the foundation. You want to set yourself up with a foundation before you start throwing money into individual stocks and more so into riskier plays. So I hear this portfolio. I wouldn't have guessed that this subscriber was in their 30s. I would have said maybe earlier 20s.
yeah,
And
but
I'd
Ari,
like,
on their defense, I think we're probably a little bit more mature in our thought process. I think that unfortunately, when this is the new .com, I don't, and everybody that's subscribed to my channel, I've been calling this .com bubble, the SPAC bubble, the coin bubble, whatever, 6,000 coins, 2,000 SPACs. It's the .com bubble all over again. It's just a new shiny name for it, right? So it's the same behavior that happened in the .com bubble. It's the greed factor. People are led by emotion. You're 8 times more likely to buy something off of emotion than logic. 8 times more likely to buy something off of emotion than logic. So what happened? All these great stories came out of SPACs. They have no fundamentals, Ari. No fundamentals. All stories. They're losing, they're hemorrhaging money, but the story is unbelievable. And that is the emotion aspect of investing, right? And so it's unfortunate. I think it's impacted more than just the younger crowd than you're thinking. I think it's impacted the broader market as a whole, because you can watch CNNBC and you're watching a lot of these big time hedge funds add positions into Robinhood, add positions into SoFi at $15, add positions into, HIMS, or not HIMS, Teladoc. These are mature, savvy investors that are buying companies the same way companies were bought during the .com bubble. Same exact way. And so I agree with you. I think your thought process is so logical and mature and unemotional that you're thinking that it's probably a younger person. It's unfortunately, I would think it's the broader market.
I would agree. Just when I think about this type of portfolio or mindset, but you're right, right? And this takes me to a huge quote guy, Warren Buffett, though, when he talks about the stock market being a device to transfer money from the impatient to the patient. That's what we saw during the .com, and that's what we're seeing now.
Yeah.
People who are impatient, right? And again, pays to be patient. And Warren Buffett's way of investing, it's so boring, but it
So boring.
works. It
It's so
works.
boring. It's so boring and it's so predictable that people don't want to do it. It's like, this is just too easy.
Correct.
This is too
But
easy.
everybody wants to pick the next hot stock. And I was actually speaking with someone the other day about Kathy Woods, right? And her pick with Tesla. And someone,
It's the only thing holding up her portfolio.
oh, absolutely. I mean, you look at the other investments within her portfolio, they tank.
I'm
And
pulling it
like
up.
she's all growth, right? But at the end of the day, she had a very lucky pick, in my opinion, with Tesla. Blew up her career. And now you have a lot of youngsters who are following her in the ARK K and the ARK this fund and the ARK that fund. To heck with Warren Buffett, to heck with Charlie Munger, right? Peter, all these guys no longer are relevant, I think, today. And we're looking to get rich by Tuesday.
Yeah. No, I agree. And this is the ARK ETF right now. And I mean, you can see it's pretty much dead money. It's pretty much, yeah, we had this great stimulus run up, but you're back to where you pretty much started in the ETF. Oh, by the way, let's minus out the expense ratio too over the last few years. So you're actually losing money if you start. If you bought the top, you're screwed. Let's just be quite honest on that one. You bought the top of this, you're
We're
screwed.
going sledding.
You're yeah, you bought. I actually feel more pain for the person that bought it a few years ago and wrote it all the way up and wrote it all the way back down and paid all the expenses.
Yep.
Like, you didn't get anything. You like it's like talk about, it's like coming off of like a
You
high,
paid
you
someone.
know?
You paid someone to take your money. I would have done it for free.
Like I would rather buy the top and be like, man, I lost my shirt, than be
Yeah,
like, oh, I quadrupled my money, and then tomorrow rolls around and I have to give it all back. Like, what the
it's
hell?
gone.
But yeah, it's like, let's take a look at the top holdings in it. I mean, I know she's basically using it as a day trading device at this point, as much as she's actively managing it. Um, at this point, Ari, I actually think some of these companies are pretty interesting. No, what are they? Strong buys? I wouldn't say that, but I think they're interesting. You look at a company like Square, Zoom. I mean, I guess Teladoc at these prices, Roku at these prices,
Look, I,
maybe.
I think they do. There's potential, and I see where she comes from in these picks, right? They're long-term potential. When I look at like Teladoc, right? That is something I think prior to the pandemic that would have slowly but surely started to take off. Eventually, the pandemic hits, and what do you know? Everybody needs, right? If you need medical attention, you pop open the app and you speak to a physician. But
Yep.
now, right? It's not necessarily I bought ARC at 120 and glad I only bought 2 shares. My friend, I'm glad you also only
Yeah.
bought two
And
shares.
the reason why I'm highlighting Zhang is a like loyal subscriber. And always asking me about valuation, and saying, I don't know, like, give me an opinion. Have you learned something from my channel versus some of these other channels? Because I know Zhang is always asking me stuff. What's your opinion on this? What do you think about that? And now uh, Zhang is doing valuations, and I think I would say that from the first time they were subscribed to my channel to today, it's funny because the nice thing about having a small channel is you kind of remember the more active people on your channel, right? Like there's about, I don't know, a dozen people that I could probably, maybe a little bit more, that I know that are always commenting or saying stuff. And I would say that as an investor, the person I talked about, their portfolio, absolutely way more mature thought process. And then Zhang, the questions that Zhang asks now, unbelievable, and she's going for CFA, so they're going to be able to tear apart stocks way better than I do with my basic, DCFs and basic charting and stuff like that. So
But, I mean, look, at the end of the day, this is why we created the YouTube channels, right? I'll say this again. I said it the last time. I did not necessarily create my YouTube channel to just monetize it and get filthy rich, right? I had one goal in mind, and that goal was to at least help one investor
speak
make a
for
little.
yourself, Ari. I'm waiting to get filthy.
I'll give you a Bitcoin, but
Oh yeah, yeah. I'll trade that thing in right away.
to help one investor. That was the goal. Help one investor, and by one like or one comment, people have learned something from my channel. People have learned something from your channel. It's a success. Whether it's a large channel or a small channel, it doesn't even matter. And so you have, loyal subscribers. I'd rather have that than a. I'm not going to mention any names, but
Yeah, yeah,
these hot stock YouTubers, and everybody's following them around. I don't need that. I don't want that. I don't want that type of attention. And then all of a sudden you're helping people lose their money.
yeah.
Not for me.
Yeah. There was a comment on my channel the other day that was and I don't know, if do you ever get haters? Like, I don't know. I feel
Sure.
like your content's so like non-biased, you don't get haters. Like, I kind of tend to be a little bit more blunt than you. I'm a New England guy, so that comes out sometimes, but
Right.
but like I got
And
a good
I was a New Yorker, so
Okay, so you could come off a little blunt sometimes, but the best comment I got recently, it was recently, and it was the first comment that they ever had, and they said, "I don't know how you don't have so many more subscribers by the way you break down stocks with an honest, open, honest opinion." And I was just like, "That's all I want." That is what, because sometimes, do you ever like want to just like say, "Screw it, I'm not making any more content"? Because sometimes I'm just like, what? Like, you forget why you're doing it, and then all of a sudden you get a phone call and you're on the phone for 3 hours with a subscriber, or you get that comment, and I'm just like, this is why I do it, because I'm
sure.
better. I might not have as many subscribers, but I'm better than the people that are pumping this garbage. And that needs to happen. Like more of that needs to come out.
Well, like that's why you always got to go back to why you started, right? I didn't start to monetize the channel and get filthy rich. Of course, there's an element there where it monetizes and you start making money, but I started with the goal to help one investor. And when I start to run with that mindset every time I create a video or push content out there, I've succeeded. But have there been times where, I'm like, oh my, this is no traction. I'm watching X, Y, and Z with 1 million+ subscribers preach about some, cryptocurrency, hot, whatever stock, and it's taken off. And we're in a time period in which, like, dude, that's not the way to go. But my channel's, growing slowly. Look, yeah, I appreciate all my subscribers. And like you said, you have closer connections with them. But at the end of the day, I know what we're doing is the right thing. That's all that matters for me.
Yeah. No, I agree 100%. And uh that's all we can do is, it's like I said before, I'm not going to have all the answers. But the thing that is baffling me, Ari, is this, okay? This is what I get upset about is the YouTube algorithm seems to push the garbage. Like it just seems to
Business to
push.
business.
It's crazy, right? It's like the best YouTubers that I like subscribe to and that I have a ton of respect for have like under 40, under 50,000 subscribers. And I'm like, I look at them and I'm like, how do they only have 40,000 subscribers? Like, how is that possible? But
Yep.
yet, but yet you have YouTubers who are, I don't know. Do you know this Voyager? Have you been following any of this Voyager crap?
No, no.
Okay,
But
bro,
I'm excited
this
for
is
what's about to
serious.
come
Yeah.
out.
Oh man, this is serious. And anybody that has Voyager, um, I appreciate it, man. At least somebody loves me out there. I appreciate it. So, no, I do love a lot of my subscribers too. Like I really want the best for people. I'm not the most educated, smooth around the edges type of person, but I'm a people person. I'm going to work my ass off to make sure people don't get screwed. And the thing that frustrates me the most is, and I have a financial background. I've got an associate's in accounting, but was studied for the Series 6, Series 7, 65, and was in financial services for over 6 years. And said, I don't want to be a salesperson. I want to be an advocate for finances. So that's why I kind of like changed paths here. But to get to my point here, Voyager. Okay, this was a platform that was built basically on the backs of YouTube superstars or people that and it's a Bitcoin, it's obviously a Bitcoin platform or a digital asset platform here that is belly up at this point, and people can't get their assets, and YouTubers were recommending this and getting paid to recommend this. And now the company's belly up. We see the collapse in crypto. They can't get their assets out. And I'll pull up the chart on it, but people are still subscribed to these people that recommended this garbage to them. And I can't wrap my head around it when I sit here and I'll go through a company, and you saw me do Palantir, right? And the reason why I do Palantir is a lot of people invest in Palantir. It's a love-hate stock. It's searched a ton. And I just want to give my honest opinion. I think the company is a high risk, high reward. I think there's a lot less risk in it, under $7, and I think it's interesting. And I broke down why the reasoning is. I don't say you need to buy it. It's a 10x. It's this. People were recommending Palantir at $30 and $35 a share.
Is it Chris Sane? Good.
Chris Sane, some of the even just
Yeah,
more than him.
he posted a video today, which I actually was a fan of because he listed 4 value stocks, and I said, I wrote a comment there, and I just had shared that these are the stocks that you should be pushing.
Yeah,
And for what it's worth, I mean, I hope 1 or 2 individuals can see a comment like that and say, "Huh, I wonder why he's making that comment."
this is
Oh, here we go.
this is the chart of Voyager Digital. Okay, dude,
What was
$20,
that?
$20 down to 30 cents. And people still subscribe, still think and listen to these people. And I wonder what the hell I'm doing wrong in life. Like Like I do. I sit there and I like my girlfriend would totally tell you. She's like, I I don't understand it. I don't understand it. And then like it's just all the it's the oat, Oatly's another one. I looked at Oatly and
You know what? This is what happens because I had comments recently on some of my videos, likewise to yours, right? Where people had shared, thanks to your content, right? I've been able to shift away from those other YouTube accounts and now going into accounts like yours. And
yeah.
I mean, it really is. It touches my heart because you know you're making a difference at least somewhere at some point in time for someone.
Yeah,
It
I mean,
people
I'm
have to lose, right? It's exactly like in life. You can't. It's not this upward trajectory. You got to get knocked down. You got to hit a rock bottom before you're going to change. And unfortunately, I think people have to lose a fair amount of money before they realize that some of their YouTube followers. That I mean, it is what it is.
Yeah. And the thing is that it's like I'll get one or two people that are like, "Man, I don't know why YouTube didn't recommend your channel before." And I'm like, I don't know why either. Like I wish I like they people are baffled that they stumble on my channel and they're like that I'm just like the algo hasn't picked me up for whatever reason. I don't know why. I don't know what I need to do. But
Well, look,
it's just
there's an age old saying, and you're probably very familiar with it, right? But everybody's smart in a bull market.
yeah.
And
Yep.
right now, I mean, here we are in a bear market, most likely going to enter a recession. And we're about to see, right? We're about to see who's who on YouTube. And I
Yeah.
just hope, I mean, really, for the millions and millions of subscribers that are out there for a lot of these channels that are pitching these meme stocks and so on and so forth, I really do hope that their followers wake up during this period of time.
Yeah. Yeah, and that leaves me one question. If you guys are open to it in the comments, leave a comment what your largest position is in your portfolio. You don't have to put how much you own or what stock. Obviously, you have to put what stock it is, but not how many shares you own. You don't have to put that. I'm curious to know what people's largest position is, and be completely transparent here, guys. This is a channel that is trying to do things right, trying to see how we can bring value. Couple things I can get from this, Ari, is one, me and you can kind of look at the stock together, give our 2 cents. And two is I just want to see kind of what are people investing in? What are people convicted in this market that we're in now? As we both stated, your two picks, we got Palantir as the biggest position for Simon. So Ari, your two picks, the Apple and it was Apple and MDT. And then mine was, I would take the safe bet with Apple. I would think that the price wouldn't move a lot, and I would take the risk with Facebook. That's kind of how I would do it. Because if Facebook went belly up, I think Apple would still be crushing it. So I would want to take the risk.
I feel like such a boring investor.
No, no, no. I think you did it right because you picked two different sectors, and I think that would be the right way to do it with the healthcare and technology, where I kind of picked hardware slash technology. I mean, who knows where Apple's going to go? I mean, they can go any aspect they want. So we looked at, but I looked at the risk as being Facebook because the opportunity at hand. But then I think when you look at how much cash flow this business has, it's basically trading for fair value, regardless what Metaverse does, regardless of what the other 90 businesses in the business model does. If those come together, I mean, you're cooking with something here. So we got a couple different here, Ari. So we got Palantir,
I'm
which
only seeing one from
so we
Simon.
got Simon's got Palantir, Adam's got SoFi with a horizon of 2025, which I'm not sure what your cost basis is, Adam, but I did an analysis on SoFi. VOO Richard VTI, that's right up our alley. That's right what we're talking about. Oh, here's a good one for you, Ari.
There we go. No,
Johnson and Johnson, baby.
sing.
We
No,
got
no, we should invest together.
Meta, Apple, and Palantir. So,
Which
like
out of those
I
three are
like
the biggest?
I oh okay. Peony, which out of those three are your largest positions, or maybe they're equal. If they're equal, depending on his time horizon and cost basis, kind of like it. Kind of like that. Obviously, it's a lot riskier. I would like to see an overweight index. Maybe just in my opinion, not financial advice. Maybe you want to look at some of the indexes down 30%. Just saying. Largest position TTCF cost basis of 14. You know how I feel about that one. We talked about that one a little bit. VOO, solid. I think you got to be buying if you got a 15, 20-year time horizon. I think it's a no-brainer to buy VOO with the top holdings. We'll go over that one in a second.
I believe I made a mistake.
Yeah, that's just a valuation issue. And Ari, I'm gonna just give you kudos, man. Like
Richard,
you're
I will. The boring investor.
no, but boring, but predictable. Like, is
Yeah,
it
but you know
predictable?
what? Look, I'll follow Elon Musk, the boring company. I'll take it. I'll take boring all day long. I'm not
Yeah,
ashamed to say it.
yeah. 625 for Adam, which was SoFi. So I think you got some meat on the bone. I think it's gonna be a little bit ugly till the end of the year, but I think overall, I think you're gonna be okay with there. Um, earnings will drop a lot of yeah. Yeah, I agree. I agree with that thesis.
At
I
least
think
in
we're going to
the next
see
12 months for sure.
yeah, I think we're going to see the E's, the P slash E and P price to earnings. We're going to see the E coming down the end of this year, and unfortunately, price is going to follow. We talked about that in the last live stream. Um, biggest conviction is Hims out of cash. Yeah, Hims is I kind of ran analysis on Hims last night. I might do a dedicated video. Interesting. I actually think out of all the like cheap stocks that are under $5, this one has about 2 years of cash burn, and they could be profitable, but they're choosing to really ramp up. So interesting. The true test on this one, Ari, is going to be the user base growth. If they have user base growth in this economy, you got to buy it. You got to buy it.
I'd have to take a look into it.
Yeah, it's definitely a high risk. I wouldn't say bet the house, but buy 100 shares. It's trading at $4 and $5. I think a $500 investment would be interesting growth prospect.
This makes sense.
Hims, Palantir, SoFi. Yep.
Susan, I expected to see more value, but it's a separate portfolio.
Yeah. So biggest position is Meta. I'm not against it. Like I said, let's. So if his biggest position, I want to use.
It's a riskier play. I mean, but
Yeah.
again, I don't even want to say it's a riskier play. Give it time. Give Meta time.
Yeah, I mean, definitely, the field's getting competitive, but like I was saying before, it's very trendy. And what is in today might not be in tomorrow. So I think Meta long term has an advantage over all these companies because of that. It's a very trendy. Listen, there is no loyalty when it comes to social media. Absolutely no loyalty. And a great example of that is going to be MySpace, right? MySpace. I mean, Snapchat. Like,
I wonder what Tom from MySpace is doing now.
dude, we should hit him up and see if he wants to join the live stream. Be like, hey man, I don't know what you do with your life. You want to join a freaking
Tom
live
from
stream?
MySpace.
So
No, you know what? It's never where we are. It's where we are going, right? So I think where Meta is going, that's the future. That, in my opinion, that's the future, and time's going to take time here.
yeah, no, I would agree with
Although I
that.
wouldn't
And
have Meta as my largest position, but frankly, I'm a boring, safe.
I think it depends on his cost basis. I think it depends on his cost basis because when you think about the recent dip, I could understand why all of a sudden you could be overweight Meta if your cost basis is like 160. Like it makes sense
Yeah.
because the stock acts went from 3 and change all the way down to 150. It's like I can understand, okay,
Start loading up.
I'm starting to build a big position in it. Like
Yeah.
I can understand that. So I think that it depends on the cost basis and the time that you started buying. But like, let's hit on this one really quick because his biggest positions were, let me go up. His biggest positions were Meta, Apple, Palantir, which, I think he's got some, good quality companies. I think he's got some growth prospect. I would like to see some financials and healthcare in there.
Yeah,
What's your thoughts?
is this you with the avatar? Because you already had Meta and Apple together, and Palantir you spoke about the other day.
This is me. I'm using my separate account and going in here. It's like,
I'd like
no,
to see more diversification. That's
Yeah.
Diversification is key, but loading up, right? I like to go with, again, Bill Ackman just sharing that at any given time, there's only about a handful of high quality companies that are out there. Pick high quality companies, at least one from a different industry. Um, play it safe, play it safe, but pick the
Yeah.
best.
Yeah, I would. So, I would like to see. I don't know what he probably has more than just this in his portfolio, but what I would like to see is he's got some growth. Obviously, when we think about Palantir, we could say depending on his cost basis and what his thesis is, could be a high risk, high reward. I think he's got absolute stability with Apple, and depending on his cost basis, I think he's got great stability with Meta if his cost basis is good. If he bought it at 300, obviously it's a whole nother story. But with that being said, I would say I would like to see some dividends and something boring with low beta in there to offset Meta and Palantir. I think Apple's going to, probably be his most consistent holding. But that would just be my opinion. Obviously, it's not financial advice, guys. I'm just looking at
So,
this. If I own this, I would say, okay, maybe some JP Morgan would make sense.
J&J,
Some
throw
J and
J&J.
J. Yep. Just something that is in a different sector that pays a dividend that cash flows are going to probably grow high single digits. That's it. What's your thoughts?
I'd agree. I would
Yeah.
agree on that.
Yeah. Um, Cost basis 955 for Palantir. So personally, Simon, just my opinion, man. I'm a big proponent. I think under 7 makes a lot of sense. I think personally by 2030, it's the $13 to $15 stock. So yeah, for me, that's just my opinion, me running the numbers. Obviously, they can blow numbers out of the water. You're still going to get a pretty good return. I think there's going to be price volatility. I think you have an opportunity to buy it cheaper, possibly by the end of this year. Just my opinion. I could be completely wrong, but uh,
I'd be patient with Palantir for sure.
yeah, the Palantir is really,
These
it's one
growth
of those.
stocks right now, I mean, we're in for a treat, I think, for the next 6 months to 12 months at least. And if you're going growth heavy right now, first of all, just do your due diligence on these growth plays, but be patient with them too.
So Ari, read that one. Give your opinion.
Yes. I mean, what is there to say? I'm a boring
I
investor.
mean, oh, you don't. Okay, so you don't care as much, right? You don't care as much to where the S&P is going, or do you? Like what? Okay, so what's your strategy right now? Are you building cash, or are you just DCAing? Are you waiting for a huge rip down?
Ask me on July 11th. I'll let you know exactly what I'm doing. But leading up
I
to July,
agree.
right now I'm sitting on a lot of cash. I am waiting. I have about $20,000 of cash
Ready
just
to
on
go.
the lines, and I am waiting for a solid opportunity to invest. Um, Now, when it comes to investing in like the S&P or for me VTI, I do try to at least once a week throw some money into the index because you can't lose by doing so.
Yeah, and if you get those bear rallies, or if we get a rip up, that's the thing. Your catalysts are always going to drive the market. And you never know when that catalyst can come. Russia, Ukraine have a solution. You
I
just
mean, look,
don't know.
we haven't had a land war, okay, since like 1945. Really, so the unpredictability right now, I feel globally, is nuts.
Yeah,
There's at one third and one fifth of the world's grain and wheat are coming out of Russia and Ukraine. We're talking
yeah,
about commodities being in total disarray. And I don't really think a lot of investors are really looking into it. And we spoke about this last time, but a lot of investors aren't looking at the macro level of what's happening here. They're just looking near term excitement and jumping in. And
yeah,
that's where I'm saying just slow down. Like for the love
yeah.
of just slow down.
Yeah, I agree. I agree with you on that because you don't know. We don't know what tomorrow brings. And that's just you're just honing in on that. And I think, that's just being a smart investor. To
This could be
expect
a
the
micro
unexpected.
You could be a Michael Berry and
I just be a
coming out with prediction
perma bull. I could
numbers.
be a perma bear and just like bet the house and cash in when it happens, you know.
I swear,
But
every day he's sitting there just like, today's the day.
yeah, but I will say, I listen to what he has to say. I do.
Of
Um,
course, yeah, of course.
so I think I showed you this last time, but well, I'll just go over it really quick. So personally, I think fair value for the SPY is sitting right around 34 to 3,700. And I think if we go into some sort of recession, I think we could see these type of numbers. So 3,200, in my opinion, I think if we get confirmation of a recession, that's probably about where we're going to be sitting. So, um, yeah. And then I don't know if I've shown you this, Ari, but I kind of do these things to understand where we are and what could outperform. It's not always 100% right, but I don't know if you caught what's been outperforming lately, but it's been utilities. I don't know if you caught that. I don't know
But
if you've
that
been
that would
following.
make sense, right? Given the times that we're in.
Yeah.
Stability.
So what a big reason why I've been saying that I think financials are the ones to watch is because that's going to be kind of where we're probably going next. So utilities and defensive is going to be kind of the safe haven for probably the next few months. And obviously we're starting to see energy absolutely collapse along with commodities. I don't know if you saw that.
Energy has been falling,
Yeah.
and
So
that
we
was
got
like 2 weeks
energy.
worth of energy exploding. I mean,
Yeah. So we got
but
energy's starting to collapse, not collapse, but energy starting to pull back. Commodities are starting to pull back. Consumer staples are starting to flatten out, and we're starting to see utilities pick up. So we're getting this rotation, in my opinion, and that's why I think to keep an eye on the bottom of the market is going to be when financials kind of hit the bottom and they start showing some strength. I think that at that point in time is a good time to start buying financials.
financials, big banks, they're going to be coming back when interest rates start to really rise. And
Yeah,
I think Powell's going to come out. This, again, I don't know for sure, but this is what I think. Powell will come out, and we're going to see interest rates rise by another 75 basis points. The market's going to get spooked, but this is phenomenal for banks.
yeah. We got some good stuff rolling in here. So Adam's been solid. Adam rather buy beaten down growth, good companies, and be patient. Moreover, there is a chance the second half might be much better. So I would not be surprised if we get a vicious rally. Um, Adam, it depends on, everybody has a different investment philosophy. Nobody's right or wrong. Like I said before, the scoreboard is your brokerage account. If your brokerage account is going up, regardless of what you're doing, you're winning the game, right? So, is it sustainable? Whatever you're doing, that's for you to answer. But I think this is a good point. I think you do have to start looking at some growth stocks that have the ability to get out of this at this point, because when you think about what has happened, and we talked about this earlier, 2,000 companies over the last few years went public, whether IPO or SPAC. Out of those 2,000 companies, there's probably a handful that are going to be pretty decent companies coming out of this if they have enough cash flow and if their business model makes sense. So I can get behind what Adam's saying, but I would also say, Adam, if you do have a lot of exposure to growth, what's wrong with looking at buying an index that has a high yield and treating it like a bond, in the fact that, if you lock up your money for 10 years, you're getting 3%. Can you find an index that is solid, made up of solid companies that are down 30% and pays a 3% yield? Might be a nice offset to the growth that you're accumulating. Just an opinion. Obviously, do what you with that information what you want. But I would just say that you're also banking on the fact that you're such a good stock picker that the companies that you're invested in can make it through. So
I,
thoughts on that?
I look, I would agree with that. It's always worth having the index in your portfolio. Build yourself the base, the foundation. In terms of the second half of the year, I'd like to hope. Um, I'd like to hope we're going to see, an economic turnaround. But look, after 2020, I hoped that 2021 was going to be better, and I think so too did everybody else. And I think again, it all goes back to macroeconomics. What does the big picture look like? Is the war, between Russia and Ukraine going to be over? What are commodity prices going to look like? How are interest rates going to rise? I think we need more data at this point in time before we can start saying, I think this second half is going to be better.
Yeah. And so Armand is hitting on a point that I brought up recently. Actually, I brought this point up today, is that this crash, we can't even call it a crash. This has been a slow, precise bleed of the economy. Yeah, I mean, it's it's physically draining when you go to the grocery store and every time you go, your money is buying less. When you fill up your car and every time you fill up your car, it's just a little bit more. When you pay your rent and you go and they're just raising that rent just enough to like cause heartache. This has been a different type of animal. And so Armand is hitting on a point that I brought up today, that I think this is going to be a slow bleed that's going to spill over into next year. And I think we could have some vicious rallies that's going to catch a lot of people becoming bullish. And what's your thoughts on this? I mean, I don't know. I don't think this is a V-shaped recovery. I don't think it's a straight crash, because inflation is the unknown animal here. And even if we get inflation under control, at 5% is still high, and 5% is slowly still going to eat at you.
It's going to take time for inflation to come down. And, the reality is, which is why I loved, Diamond's segment earlier today. But when we're looking at things for the first time, I mean, really unprecedented times right now, we have to put aside everything we think we know. And that's why I mean, again, cautiously optimistic about the second half. And I'm not looking really back at, other recessionary periods, because it's like apples to oranges in the context of what we're dealing with right now. We can't even look at '08, right? Because '08, the banks were in a totally different situation. People's
Yeah.
wallets and savings accounts, totally different situation.
Yeah.
Right now, okay, the consumer has money in the bank. We're still spending that money that we got back in 2020. And
Okay.
hey,
So I want to try to blow your mind here. Okay.
go for it.
Everybody, so I agree with everything you're saying here, and I want to answer this question. I think this is a great question here. So I think we need to answer this question, because I think we can have an impact on this individual without giving financial advice, obviously. But I want to blow your mind for a second. Okay. I've been thinking about this one for a while. So '07, we had the ninja loans, or '06, we had the ninja loans, right? No income, no job approved, right? What the commonality that I'm noticing here, okay, and it's happening differently, but people are everybody looks for the same crash. Like, oh, is it the financial crash, or is it the .com crash? Every crash is different. So wherever this one's going to come from is going to be completely different than any other crash, and nobody's going to know where it comes from. But I will say this: '06, okay, ninja loans killed the economy, right? For the most part, the housing market.
Right.
Something similar is formulating here, and I'm going to explain why. The reason why ninja loans killed the economy was you get a paycheck every week, right? And you have 30% going to your mortgage, 20% going to your car. Like, you have your payments ready to roll. And then the interest rate changed on you. And then all of a sudden, it was 45% going to your mortgage and then still going out. And then all of a sudden it was 65%. And then all of a sudden you couldn't afford your mortgage and you're filing bankruptcy, right? Housing crash. Okay. Today, that variable is still in the equation. It's just called inflation. And so if we don't get inflation under control, your income is still being spent, much like the '06 bubble. It's just being spent in a different way, because it's not being told to you that interest rates are going up. It's being told to you when you go grocery shopping. It's being told to you when you fill up your car. It's being told to you when you pay your taxes. It's being told to you when you pay your water bill and energy bill. But it's still eating away at your paycheck, much like the '06 crisis. What's your thoughts?
My friend, you have Michael buried me.
Boom, drop the mic. No, but it's like it's coming from a different
No, I mean, look,
place.
there's a lot of truth. There's a lot of validity behind that. And, I but again, there are differences, right? And that's what we also have to, I think, focus on, because we can look at the similarities, but in we didn't have a land war. I mean, it's
Yeah.
crazy to think about right
Yeah.
now. It is 2022. There's a land war going on. And a
Yeah.
matter of fact, we have Putin, who's currently, I don't know, I only, God only knows what this man is thinking at any given second, right? But I take his threats seriously, because if he does, in fact, do a total shutdown of gas into Europe, then what?
Oof.
That's a totally different situation than what we had going on '06, '07, '08.
Then you're going to be saying, I wish I had cash on the sidelines because,
But to be fair, look, you are right. It's
yeah,
just a different name.
it's the same. It's the, like, to me, it's going to be the same outcome. It's just going to take longer because it's inflation, right? An adjustable mortgage, all of a sudden your mortgage goes from 3% to 10%. And you're like, holy crap, how do I pay this? Where inflation, it's going to be a much slower bleed. But I'll tell you right now, man, if inflation does not get under control, to me, it's going to be the same outcome as '06, where people can't afford their mortgage anymore because they have to decide whether to put food on the table, put gas in their car to get to work, and they and to pay the electric and heating bill, especially when we go into the winter months, right? So I see this kind of being the same animal where it's basically deteriorating your weekly income, your assets that you are fixed or whatever. It's basically deteriorating your purchasing power essentially. It's just not called a ninja loan, or it's not called an loan. It's called inflation, but it's
Yep.
essentially deteriorating your purchasing power in the same manner that it did in '06. I kind of was talking about this today. That's why I was like really passionate about it, because I'm like, to me, I think it's the same outcome. It's just going to take a lot longer.
A sit down and coffee with Michael Berry.
I'm telling you, man. I mean, you got to take some of what he says. Like, you got to
No,
listen,
look,
because
I do. He's a brilliant man. I don't knock him. I always think it's funny. Every day, I think for the last 365 days, I've been on YouTube, and it's another Michael Berry video about the
yeah,
next big crash, and
the next big crash is
hopefully we're
coming.
gonna be right.
Oh wait, what Robert Kiyosaki? Everybody buy gold. Gold in real estate.
I
Which
want to get to this question though. I think
I
it's
know.
great. What do you think is the most important when you invest at 22 years old? You want to
And
take
then
it first?
no, you go first, and then the follow up.
Where's my button? So the most important, if I had to go back to my early 20s, I would honestly just focus on building a massive position with an index fund. Massive. I'd stay away from the bets of the market, the noise on the street. I'd stay far away from your friends who are, maybe whispering in your ear about some hot stock. And I would just focus on building a rock solid foundation. And if you want to get into some individual plays, do build up on the Apples and Microsofts and the Googles and Amazons, because those are going to be the plays that are going to stand the test of time, in my opinion. That's my 2 cents. And again, also, just as I advised earlier, have an emergency savings fund put aside for yourself. You're 22. I'd say like 5,000, 10,000.
Yeah.
But I never have less than 10,000 set aside.
Yeah, or you just never know what's going to happen, and you want to have some liquidity, some flexibility, all those good things. I agree 100% with what you're saying. So, got a couple ways I would actually look at this one. First and foremost, Simon, if you're an entrepreneur or if you have a business idea and you're 22 years old, I think the best investment is to invest in any ideas that you have and taking on the risk on you first and foremost. So, not sure if you're taking in any business ventures or if there's things that you're pursuing. But I would say that the number one thing I would do is invest in you, because there might be an investment that you have an idea on where it costs you 5 or 6,000, but you can make 50 or 60,000 in a year off of that 5 or 6 or thousand. there is no investment in the market, unless if you're watching some of these other YouTubers that you're going to get, obviously not our stuff, uh, but I would say your best investment right now is any business ideas that are long term that you really think are feasible, that you have a business plan to, that you've done your due diligence and you think you can pursue. I think you need to obviously take a portion of that money and possibly invest in yourself. Piggybacking off of Ari here, I think he's absolutely right. The best bet for you right now is you're given free money in this market, in my opinion, right now. The market's going to be in some serious turmoil here, and even the best stock pickers on CNBC and some of these channels are having a hard time picking the winners. The watching YouTube and these people that can't even read a financial quarterly report that are yelling out stocks are probably not the ones you should be listening to. So I would say taking an index route when the market's down 30% is just it's easy money, especially with your time horizon being 40 plus years. Okay. We're talking about 40 plus years of compounding interest. So first and foremost, max out your Roth IRA. Okay. You can't go back and ever do it again. So you put the 6 grand in there, you buy 60% of it should go right into an index without even thinking. I'd probably sit 40% on cash in this market, and just wait until another dip comes and just keep maxing out your Roth IRA every year. And I would invest in yourself at that point in time. Pick apart individual stocks in those indexes and learn how to read the quarterly reports and start maybe dabbling in individual stocks 15-20% of that.
Yeah, I'd like to retrace my footsteps and actually double back on what Colton shared is IRAs. Get invested into an IRA, Roth IRA, because again, talk about free money getting put on the table. And I think what a lot of investors, younger investors, fail to recognize is the game of taxes. Of course, as you grow older, you're going to make more and more money, but it's not all the time how much money you're making. It's how much money you're actually able to tuck away to save and more so to grow. Utilize your IRAs.
Yeah, and then this is a pretty good one. And Adam, I see you. I'll get to your question. So kind of talking about you said having that oh crap money, and then creating a second flow of income, whether that's through real estate, whether that's through dividend investing. Right now I would say that yes, you're losing to inflation right now, but cash is also the ability of flexibility, having the ability to decide if you want to go into real estate, if you want to go into individual stocks, if you want to go and invest in yourself in a business. Having cash allows you that flexibility to decide on what you want to do at your age. Personally, the thing I would focus on, and depending if you don't have a business idea in mind, the next step is you have to find a way to make as much money as you possibly can. That's not going to stress you out. And it's something you enjoy doing, because the one thing you have right now is time, right? You're 22 years old, man. I wish I knew what I know now at 22, because I would probably be retired in 10, 15 years. What are your thoughts on that?
Okay, I'm on the same boat. I think, at 22, at 20, 21, 22 years old, where I was, was just trying to throw my money into the market, make something of myself. But at the end of the day, what I failed to recognize was the opportunity cost that came with not risking a little bit more of my time, which is why I appreciate what you're sharing, Colton, because I don't, if you go back to 50s, 60s, 70s, 80s, you think about some of these musicians, right? Right now at 2022, you can be an amazing guitar player, get yourself on YouTube and blow up
Yeah.
versus these guys who had to go from bar to bar, you
Yeah.
know, from gig to gig. And I think it's conceptually the same right now. Find something that you're really passionate about. I was helping at Rutgers University. I would come and speak in a financial class, and one of the students was like, "Why don't you start an online class?" And I was like, light bulb moment, and I did, and that class did very well. That was on Skillshare, and so I'm recommending this to literally say, like, if you have a passion for, maybe it is guitar, maybe it's art, maybe it's, writing, go on a website like Skillshare, start to play around with passive income streams and start to build. Even YouTube. Look, as silly as it may sound, right? Just buy a camera, start speaking, and next thing you know, you have this following. You never know where it's going to take you. I mean, this
Yeah.
journey that I'm on, I went from working in a real estate firm in Manhattan, building a YouTube channel, and now I actually am a newscaster at a financial company. So, right, I didn't know that was coming down the
No,
pipe.
dude, that's in our dude. I'm so jealous. I'm like, that is so awesome. You're doing what you love and you're pursuing it. And it's awesome, man. It's super pumped to see what comes of that. And I'm glad we were able to connect because I'm gonna be following you on this journey as well because hopefully we can do these streams, frequently. And I think, even though we're kind of just starting out here, and I think we're bringing a lot of good, sensible advice to YouTube that probably is needed, and hopefully people are enjoying it and getting some sort of nuggets out of this. I just hope so. I think so, but I don't know. Only time will tell. But I mean, I love our conversations, and I just hope that people are getting impacted by this. I mean, the question of being 22 years old and the opportunities at hand and how I would change things and do things differently, it's just a phenomenal opportunity in this market. You have to embrace this crash. I mean, in many different ways, there's going to be business opportunities that come from this. There's going to be investment opportunities that come from this. And having the ability to pursue something you really want to do and make money and invest and just do becoming your best self in this environment, it's just huge opportunities ahead. So yeah, I'm glad you're on the channel, Simon. And hopefully we bring some value and shed some light on some stuff here, and you can grab a couple nuggets. So Zhang has 8% of income going to IRA, and it gets an 8% match. That's awesome. That's awesome. 24 years old.
Wow.
Yeah, man.
You don't sound old. You sound smart.
Yeah, right.
It's like
Jeez.
there's nothing.
I got some grays in my beard now. I'm like, shoot, man, no. But I so 24 years old, man. I was in the military, blowing money. And I actually the first book I read was obviously it's going to be the stereotype. Rich Dad Poor Dad was the first book I read, and I was in the military. Um, and bought it. I bought multi families when I came out of the army, and bought in the wrong area. And I did okay for 6-7 years, and then had some serious headaches. But that's a whole nother friggin' video for that. So you don't know what you don't know. Okay, one more thing to the young crowd
Whatnot.
that's watching. Seriously, this is very important. One more thing to the young crowd that is watching this. College is important. I'm not going to take any education away. The most important thing is finding a true mentor in the field you want to be in, and making sure that they want you to grow. Because if they don't want you to grow, they're not going to give you the best advice, or they're going to look at you as competition. Finding a mentor who is in your field that you want to pursue, whether that's investing, whether that's real estate, whether that's opening a small business, and making sure that they have your best interest and learning from them is going to get you much further than reading a textbook from a professor who is just trying to make their 60 grand a year and get their match on their 401k.
Yeah, I'd also like to say humble yourself, right? I think we really are living in a time period in which there's a lot of entitlement, and the truth is, you humble yourself just the slightest bit, it opens opportunities of a lifetime up for you. Because going to work for Mr. Banker for free for a couple months, yeah, it may stink for a couple months, but you wait and see what you learn and how you can apply that knowledge thereafter. You're setting yourself up for success. And I think that's something, that I was money crazed, when I was 17, 18, working in a pizzeria. I loved it. And I started making a lot of money doing deliveries. But they're like, my brother actually started working for a company, helping out with the finances and, accounting. And he did it for free. He had a job offer the next summer. And of course, he started making more than I was, but I was getting under the table money, right? So it's just you got to think about these things sometimes. And when someone is out there, they're living the life that you want. It perhaps is one of those opportunities where, say what I say, do what I do, get what I get.
Yeah. Yeah. And I know we'll finish up here. We're pushing some time. I don't know if you have to go anywhere. I mean, it's to me, I got nothing really going on. So if people are enjoying this, I'm willing
I'm
to stay a little bit longer.
7 hours ahead of you.
Oh, geez. Oh man, you got to get to bed soon, dude. What the heck?
I gotta report the news tomorrow.
Yeah, geez. All right, so I'll let you end on
Let's
this.
let's uh let's do the 5 6 minutes here. 5 minutes.
Okay. Yeah, we'll
One
go we'll
minute,
go
hour and 30
minutes.
minutes.
5 minute countdown here.
And there we go.
Um, what's one thing you could change that you made a mistake, maybe whether it's starting to invest at a younger age, whether it's starting, seeking out investment advice, what revolving around the investment side, what's one thing you wish you would have done sooner as an investor?
I mean, look at starting earlier. That's it. Time is your best friend as an investor. But I recall, my uncle was a vice president of Fidelity in Massachusetts and Boston, and I always used to go to the house and speak with him, and he always used to tell me, pick companies that you're really interested in and that perhaps you use their products,
Yeah.
and start to do some research and maybe start to throw some money in. And I was, in my early teens, but I was so scared of potentially losing money. So, what's one thing, investment wise, starting earlier, but even so, is just reading. Like, okay, so, if you go, I know tipranks.com has it where you can build yourself what they call a smart portfolio. You don't actually have to invest real money into the market, but maybe you can simulate in some way or another what would happen if you invested X amount to this company, give it a month or two, see how that investment turns out. You get a little bit more comfortable and start to throw the money in. But time is your best friend as an investor. And, looking back, I had a lot of money in the bank, as a teenager. I was always working and always putting my money in a bank account. And I think the best yet, I actually opened up a CD in my early teens, and I remember
Yeah.
coming home and I was so excited. Dad, I opened up a CD, and I come from a family who they never really showed you how to do something. They just said you should take a look at this, right?
Yeah.
Learn about it. And so I remember my dad saying, like, why would you do that? You should put it in the money market. You should put it into an index. But I didn't understand these things. So really, I mean, do homework, do
Yeah.
your homework and get invested. Utilize the time that you have. What about you?
Oh man, it's a deep question, man. I think 5 minutes is not long enough. Okay, so give you a backstory on me really quick. So Army was my way out. 9/11 happened. The Army was my way out of kind of where I was. I was a good athlete and screwed up in school, so therefore college football was kind of off the table at that point. So I joined the Army. I got to play sports for the Army for a little while and came from a background where money was never talked about. I grew up in a trailer, didn't have money. Uh, you know, my dad was single parent, worked two jobs all the time, never really made it to my football games, never really, just had one of those type of lives where I had to figure shit out for myself, right? And the biggest regret I had was the people that I admired the most. I was
Mm.
scared to ask questions about money and how they did things. And so I think you have to be more inquisitive younger and ask the questions of what would you do different? Why would you do it different? And get the advice from the people you admire and the people you respect. And don't be scared to ask questions about money. I think we get scared to ask questions about money because it's so personal and it's so private and it's like, this is no, I don't want to. But once you ask those questions and people start divulging, they want to tell you, they want to help you, especially if you're young, right? If you're young and you're inquisitive and you're intelligent and you're a go-getter, people are going to want to help you. So use that to your advantage. Extract as much information as you possibly can. Ask questions about money. I grew up in a decent area, and I watched a lot of my friends' parents do well for themselves, but I should have asked more questions, because I think I would have fast tracked to where I am today. I would have been like, they would have been like, well, I did this and I did that, and this is the mistakes I made. And I think asking more questions to the people you respect and not being scared to really ask the hard questions is the key, because investments are great. Investments are great. Stock market's great. But that might not always make you happy, and that might not always make you feel fulfilled, and that might not be the direction you personally want to take. There's a lots of ways to make money in this world. And I wouldn't just limit it to just investments, but I would limit it, like, open your horizon and say, if you want to get involved in real estate, find those people that are successful while you're young and ask them the hard questions. How do you value a property? How much money did you put down? Were you scared? What mistakes did you make? What would you do differently? And you need to use that as an education, because these are people that are physically out there doing it, and there's no better way to learn. So that's just kind of what I would do differently, is ask the harder questions and really take notes.
That's great. That's that's key. Absolutely.
So, well, I finished it up in under 5 minutes. So, but yeah, man, we'll text. We'll get this launched again probably in. I think I'll be out of town for about a week, but when I get back to town, we'll definitely launch this again probably in the next, I don't know, 10, 12 days, maybe under 2 weeks. We can
And
do another live stream.
closer to July 11th, 12th.
Oh, that's true. We're gonna have to. We're gonna
Perfect
have.
timing.
Oh, man, like the day before would be phenomenal. The day
That
before
would
would
be
be
ideal.
phenomenal. Maybe I'll pack my stuff with me, or even try to do something live with my cell phone or something. We'll figure something out. But yeah, I guess we'll sign off here, everybody. And yeah, man, it was great chatting with you once again. Always enjoy this, and really like where this is going. So hopefully everybody else is finding value in this. And yeah, man, we'll sign off here. As always, guys, appreciate your time.
Always a pleasure to be on here, and wishing everybody the best of luck during these volatile days. Play it safe, be patient. We'll catch you in the next one.
Absolutely, man. Take care, investors. Peace.